Good afternoon. This is the Eye of the Storm podcast with the Elliott Wave weekly update for the NASDAQ 100, being recorded on Saturday, October the 11th at 11:55 a.m. Pacific Daylight Time. A lot to unpack today, as we all were there yesterday and we all witnessed that the trade wars became front and center at about 8 a.m. Pacific, 11 a.m. Eastern Time, when the president made an announcement that the Chinese government had done some sinister things. And I quote, I'm using that as a quote. And so the market just began to nosedive. Um, and then after the market closed, our regular session closed at 4 p.m. Eastern. Um, the president came out almost right towards the end of that extra hour that we get and made another announcement that his intention was to boost or add 100% tariff on the already existing tariffs uh, between the United States and China. And the market just did one last swoosh and plummet down. So ultimately, on the day, the NASDAQ was down over 1100. It was 1101 and some change. The Qs were down, interesting, 2120. And that was at the close. And after, again, even after the secondary close, which is at 5 p.m., as the stocks continued to trade, the Qs got pushed back up to 589.93, bid at 589.97. Now, I find that to be very interesting because at the same time, what I saw happening in a lot of the stocks, the underlying, is that they got pushed back to their closing price. For example, in NVIDIA was closed at 183.16, but I saw that it would trade it down to 180 and somehow got back to 183.16, 183.20 bid offer. So I'm not sure what was going on there. I don't know if it was just brought back up to the closing levels for that expiration. Um, that's all very possible. So again, we saw it in Apple, we saw it in AMAT, I saw it in AMD, who actually were moved up higher than their 4 p.m. close. So I'm finding that all very interesting. And for all I know, that's exactly what did happen. They actually did push the stocks back up, but they didn't appear to be for the major part of the extra hour that we get. In fact, that secondary close in NVIDIA was closing at 180. So interesting. Nonetheless, I'm going to start here on the cash market, but also what I'm going to bring in today is how I left analysis on Friday morning, and which kind of gave two sides of the story, but also that through my and this is something that I only provide to the membership, YouTube members, that the gamma levels, all of them got broken on this slide lower. And I want to go over that to really reinforce as to what's actually happening. And it was an options expiration on Friday. And then next Friday is the actual October expiration. And if this rolls out through next week, I pretty much can say that I believe we'll have some intense volatility swings. And we're talking about that volatility, like the VIX being pushed to somewhere around 25 to 30. So this could get very, very interesting as we continue to roll through some intensive selling. So first thing I will have is additional or new levels for on gamma levels, since we already went through everything and the markets are down so far to start the week. But I won't have those till Monday morning. But we do have starting tomorrow, Globex. We'll see how things are going to kind of come through, whether we'll get a bounce because of that Friday expiration, because of the positions that actually were exercised, and how a lot of those traders are now left with either positive delta or negative delta or et cetera. So there could be a lot of adjusting going on, or just a continuation because we're not getting any news. Now, as I'm going to go through, I'm going to start with just the Elliott analysis, adding in the gamma and the options. And then also, I've updated the algorithm that I use to kind of give me an indication on where we are and what possibly is going to happen into moving forward. That part's continuing to come through on point, so to speak, because we were looking at a decline in October and probably accelerating a little bit towards mid-October, which again is next week. Mid-October next week. Also, starting next week on the 14th, we start with earnings, our earnings season. And now it starts with the banks. So we get JP Morgan, we get Goldman Sachs, we get Bank of America, Wells Fargo, Capital One, all the big large banks come out and they put the reports out. The one that I'm going to tell you that I'm going to be most interested in, because the CEO normally delivers that the commentary and goes over it, and that's JP Morgan. And already Jamie Dimon, the CEO, has been over in England or in the UK, and has been really making some very, very interesting remarks as it pertains to the US markets and the US economy. And he has been for quite a while now. So I think that he's also coming in on point and presenting it in not a threatening way, but in just a very, hey, this is common. This is not common, but this is common sense, and this is what he's looking for. And now we actually put a time frame on it. So let's see if he says the same thing uh, when JP Morgan reports their earnings. Now, earnings themselves, I think, are going to be very interesting because we now have another quarter where existing tariffs can continue to be factored in to how they're affecting the individual corporations, the individual companies, and then how that's affecting the stock price, and then how also it may affect it moving forward into, year end. Okay, so here in the NASDAQ, I'm on the cash market. I'm on my monthly chart. And so again, we are still in a primary third wave up. And inside that primary third wave, we're going to have 5 waves of intermediate degree, of which 1, 2, 3, and 4 are complete. I'm going to just to move this down very quickly. And so there's intermediate 3, there's intermediate wave 4. And you're going to notice I got 2 boxes lined up here. And just to quickly review what those are, since this is the bigger one, this is where I am thinking the primary fourth wave, because that's what we're looking to go into once we've completed intermediate wave 5, and we're very close. And I'll go over that in just a minute. Then I'm going to be looking for a primary fourth wave. And that primary fourth wave would be expected when it's complete. First of all, it's going to unfold in an ABC pattern of intermediate degree. So we have intermediate wave A, intermediate wave B, intermediate wave C to get to the low end of, or the low for primary 4. So right now, as Elliott left it as a guideline, but something that I use pretty stringent. I am very I don't want to say loyal, but I use it all the time when I'm working through my analysis. That Elliott left what for us that a fourth wave in motion will normally find its terminus, its endpoint within the price territory of the fourth wave of one lesser degree. Well, I'll be counting down a primary degree fourth wave. So where am I going to find it, expect it to come into, is the price territory of the intermediate fourth wave. And there it is right there. And so that is the low from 2022. So that was that decline, that initial decline, that after interest rates had peaked in terms of the yield or the interest rate topped, and then we started to go down as we were, I guess, just in a downswing of the whole thing, and as interest rates started to rise. So, because inflation was kind of looming and raging at that point. So then from that low in October of 2022, that's where we began intermediate wave five. And so within intermediate wave five, we're going to have five waves of minor degree, which one, two, three, and four are in. So we're in minor wave five of intermediate wave five of primary three. And then within minor wave five, we're going to have five waves of minute degree, of which we have one, two, and three complete. So right, my estimation right now, we're inside and we started pretty much off of Friday's highs. We started minute wave four. So what's left once we're complete with minute wave four is a minute fifth wave up, and that minute fifth wave will then complete not only minute wave five, but minor wave five, intermediate wave five, and primary three. So we're pretty close. We're close to being into that last leg up. But first, we got to get through this fourth wave, which kicked off on Friday in grand style. Now, quickly, so I can move my chart down, this box here is where I believe that intermediate wave A, and when we're starting in, once we get into that cycle fourth, excuse me, that primary fourth wave, I believe the A wave is going to come down into this window. And this window is just the minor fourth wave, which actually goes down to April, the April 7th low. And this index in the NDX cash was 16,542. So I'm looking for the intermediate A wave of primary four to find its endpoint within this territory, this price territory. Okay, so now let me drop this down and let me bring it down to the daily. So we're going to get a little bit more. So here we are. There's the ticket. Now, I want to bring in, because the algorithm had talked about left tails and right tails, and event that usually it's going to be event volatility, event moments. And so because we're getting ready to enter into earnings, those are events. That could be an event, a volatility event, and be produced. And so what the algorithm does, it gives us left tails and then percentiles, but then it also puts together percentages of what we're going to be, what would the probability be for a 10% move to the downside. And so that probability is upwards of about 35 or 36% probability that we'll get at least a 10% move. Well, after Friday, the 10% move is not that far away. So, and I think what we're actually doing here is, on a smaller version, we're putting in the minuet A wave of the minute fourth wave. So let's take a look here. We have these tails, and I just want to bring them up. So with the 10% decline in the NASDAQ 100, there's, again, I believe it's going to be about a 35% probability that that's going to happen. Again, we have to include Friday in that 35% probability. But where this number comes in now, because I've made the adjustment for Friday's high, is 22,675. Now, we also have a 15% window, so there could be a 15% move, and that probability drops, obviously. And so but still 17, 18% probability that we could drop 15%. And again, against Friday's drop, if this all continues, and it's going to start to look like what we had in April, right here, well, then suddenly I don't think we're going to get into this, but we can take note of how the market sold off. If we get it up here, it might be a little bit more muted because this was very intense. in terms of we get down to that 10% marker, and that would just be wave A of minute wave 4. And then we get a B wave rally and we get a C wave, and that could take us down to the 15%. Now, again, these are the events. So the first event would be it came from what's happening within the tariff wars. So that's an event. And so if that brings us down on that 10%, we get a B wave rally. It could be something else, or then it could flip, and it could be uh, geopolitical for sure, but also it could be attached to earnings. Something in the earnings reports could drive the market, slip it back down. And then we're finishing that fourth wave. This is the interesting part, how these calculations will fit in to what's physically happening all around us in terms of the tariff war. Is that something any of us were expecting? No, it was a total surprise. Market let you know it was a surprise to the market, and the fact and how quickly it went down, how quickly the plug was pulled at the bottom and just swoosh, there was nothing. You want to talk about a Wile E. Coyote moment? That was it. When this market leaked up to a new high on Friday morning, and then that's like running off the cliff and stopping and going like waiting for gravity to take over because there was nothing underneath it. And so the market began to slide and it started to cut through gamma levels. Now, I'm going to bring this down and I want to take a look at our hourly chart. So right in here. So again, my minute wave 3 complete, and it actually was on Thursday's high at 25,195. And actually, let me take that back. I'm down the hourly chart. It was on Friday morning. So whether it was directly and it was on the opening, and we zipped up and then bar changed. And so here we have it. We reached the high, 25,195. So it opened at 25,116, ran up real quick, and then died. So this news basically, we started to sell off at the 10 o'clock. That news hit the tape at about 11 o'clock, a little bit before, but it really started to kick in at 11 o'clock. Now, here I want to pull in again, options expiration. So the market was actually very busy just trying to where are we going to go? Where are we going to go? And for example, in NVIDIA, the high on NVIDIA on Friday was 195. So that came right after the opening. They pushed real quick, got it up to 195. Now, whether that was monetizing whatever position, like maybe a call, and it was successful as all heck, right? Gets up to 195, and that was it. It immediately came off at least 2 points from there and then fluctuated between 191 and 193, right? With the next strike being 192. When that news came out, it just slid, and slid. Now, going over, and this is where I want to pull in, that how I left this on Friday morning. I'm going to bring it down to the 15-minute. And in this, I actually want to go over to the NQ, if I may, because it was trading all the way through. So coming in to Friday, as it was left at the close, I'm just going to back this up, and it was right there. There's where we closed on Thursday. So as we entered into Globex, we went up, and then we just kind of came down. So my thought is that if this was marking as wave 1, and we would have a wave 2, and I thought we could get up to here, but I didn't, we ended up getting much higher. Then the next step for the downside would be a third wave. And if it was going to happen, a third wave, longest and the strongest, within a five-wave sequence out of waves one, three, and five, third wave is that major. That's like when that point of recognition kind of hits the market. And this could be the upside or downside. Doesn't make a difference. In this case, it was to the downside. But things begin to accelerate. So what I talked about was that for dropping into a third wave, it's got to begin and it's going to in its current position, and it needs to start going down, and it can't look back. It should pick up speed and start breaking resistance levels, support levels, and start breaking below moving averages. Well, you'll notice that initial slide on the 15-minute chart, it sliced right through everything, including the 200. So that already was now picking up steam, quickly picking up steam. And so with from just here in the NDX, I'm going to go back over to the NDX. So just to kind of show where the market opened and tried to, I mean, there was a couple of combos there, but the first thing that the market really needed to do on the downside, oops, that didn't work. What the market needed to do on the downside was when it broke below 25,000. But here we are. We're right in here. There it is. And you see how that's where this closed. So they got through it and they ran it back real quick. And the next bar opened. And then it broke. That break was large gamma 4. And then we started to come down. And now we're picking up steam and we're coming down based on breaking large gamma 4 and just the intensity of the selling. Then our next level that we broke through was the put wall, and that was at 24,750. And that was right here. And you see how that then started to pick up speed. And then it went down to here. We got a bounce. And that was the first bounce. And they were trying to get it back above that 750 level. It failed. Here we got close, but it failed. Now starting to continue to go back down at 24,525. Right here. Oop, right there. We broke the call wall. Also 24,525, large gamma 3. So we pushed all the way through that, came down, and as the market then bounced again, got back above 24,525. But then we started to slide one more time. Now, our next level to break was 24,500 right here. And when we broke that, that was large gamma 2. Now, so we're starting to slide on that, right? Accelerating some selling. Our next level was 24,390. And that came here towards our last hour. And right there, 390, right here, right there, where we mark it, where this bar opened, and then it broke. And that was the volatility trigger. Now you saw that thing, it just kind of came down. Now this took us pretty much into the last half hour where expiration really started to come in and the market rallied back up, got itself back above. Did it? No, it did not even get above the volatility trigger, but we saw the buying come in. And then the market in the last 15 minutes sank like a stone. That was the rally to do whatever they need to do. And this was the realization that the volatility trigger had been broken. So the massive amount now coming into this expiration, folks, and I spoke about it several days, it was call heavy. The lead up to this expiration, we saw up in here, we saw the volatility or the risk on trade creeping back in, and then heavier in NVIDIA, heavy in Apple, heavy in, I believe, Microsoft. and Meta. So a lot of these stocks saw that risk on trade for the moving towards the fourth quarter, moving towards third quarter earnings. And because the expectation was that they're all going to be, everybody's going to be okay. Bam. We plowed through that volatility trigger, which is the big thing about doing that, is where it shifts from risk on over to risk off, which means you got to go buy volatility. You're buying the VIX position back. You're selling out of all these calls that that whoever has put on, and the hedge gets reversed. So it's pretty incredible because you have to remember it's like if the dealer is now buying all these calls back on expiration, they got to get out of their hedges. So you're buying, you're then selling. Remember, a risk off trading, selling, risk on trading, buying. And that's actually just the action of what the dealer who makes the market in the options has to take, what side they're taking. If they're the ones that have to, as the masses come in to buy calls, it's the dealer that sells the call and then has to buy the underlying. So dealer may have already been selling their hedges ahead of time. But when it really comes into play that the volatility trigger is spoken, and then we're seeing the exit from the options positions, then you're going to see things accelerate. And it did. That's what causes a lot of this acceleration. As we're breaking these gamma levels, as we're breaking these levels, then because it reverts the trade. We're moving towards, from risk on, which is the dealer has to buy, that's the hedge, to risk off, the dealer's going to be buying the options, you're going to be selling them. That's just, and it's like, that's the way it is. And one better, it's like the massive panic to go buy the puts, for the public buying the puts. Dealer has to sell the puts. The dealer then has to also sell. So you see how it can really pick up and gang up because what the dealers have to do in a risk off situation is sell. Because if they're the one that's going to have to be selling the puts because they're coming in to buy them, then they're, yeah. Just think about the action. That's what I'm talking about. It's like when we start to drop and they're reversing positions, and what does the dealer have to do that's making the market and providing the fill on that order? So risk off, selling, and it gets aggravated, accentuated, accelerated because, first of all, when we started to come down, remember what I said, we were very call heavy. So the public, the retail, even a lot of the larger traders, they were long underlying volatility. So that's premium. That's in the calls. And now that they're sliding through strike prices before you can say hello, and then they're just getting out. They're hitting anything that they can hit, and that's what happened. Then you got to start. It starts to accelerate. From that, right? Dealer has to sell. Now add to that, they might be short the put. This is the retail. This is the larger traders may have been short the put. Long the call, short the put. All right. A lot of positive gamma. And now you're sliding lower. You don't want that positive gamma. It'll kill you. So what are they doing? They've got to go buy the put, and they've got to go sell the call. What's the combined action that the dealer has to do? Sell. And when they're doing it strongly as a market is tumbling, it just adds fuel to that existing fire. And that's what we saw. How much of this is going to continue? I would suspect that we've got at least probably another round. So now I'm going to go back to the Elliott and how I'm marking this. So there's our high, there's our top. 1, 2 in the cash, a little different in the Qs, but 1, 2 here in the cash, and then a 3 and a 4 And I forgot to put the 4 there. So let me just do that very quickly. Put it up right there. And then we'll know what I'm talking about. And so I believe we're in that fifth wave. Now, in the cash market, I only have 1, 2, and 3. Now, this fourth came, you're going to see it in the ND and the NQ, and you're going to see it in the Qs as well. So interesting, because I'm looking for a fifth wave to complete this, likely the minuet wave A of minute wave 4. So bringing it back out to that hourly chart, I start to think, okay, well, we're reaching there. Where's our first fib? Our first fib is actually 0.236, and that's at 23,398. Now I want to bring in, because further down below, let me go out to my daily. It's going to make it easier. I don't have to scroll so far. Left tails, right? So now I brought in the gamma, and that's the options trade, and we're tying it together with the Elliott, and now the fibs. But now I have one last thing. The algorithm that was supplying me with the answers to what does the outlook look like till the end of the year. And the algorithm is making it very clear that we should meander higher in October, but then we're going to have a decline. A decline should happen in October. That could take us end of October. So this kicked it off. Now, the algorithm doesn't really know, or doesn't really say, well, we're expecting, that we're going to have this tariff war. It just kind of goes on all the data and pulls the data. So it wasn't looking for a sudden move. But the tails, it does do a probability on the tails, right? And so we have right side and left side. Right side is sitting up here. So again, right side is a bullish event. You call it what you want. If we have a bullish event and that event momentum, then that could come from an earnings report. It could come from a decent economic data, which we're not getting any of because the government is shut down. So, but they're there. Now, what the algorithm does as well, it gives us percentiles that become more real. So we have a 5%, and then it jumps to 25%, 50%, 75%. So the percentile. Now, the probability of each of those changes. So we have the percentile, and then that gives us a number. And then we also have a probability of that percentile actually being in force. So here in the NASDAQ, the two most common percentiles, the ones that have the highest and the next highest probability, are the 10% and the 15%. So in the 10%, in the NASDAQ, there's about a 38% probability of it occurring. Well, we're in a minute wave 4. Notice I'm putting this in that color because this is what I'm thinking that minute wave 4 is going to come down to. Now, left tail for 10%, 22,675. 22,675, right about in there. There's our previous fourth wave. That's what I'm looking for, this minute fourth wave to come back to. That's 22 in here. That's 22,977. Well, an event, i.e. trade war, now we can put a title to it, well, that could push us a little bit beyond, and we start heading down towards 382 on a fib level, which happens to be the most common retracement for a fourth wave. Just so happens that this third wave was pretty large. And so that puts that 382 down below the previous fourth, but the previous fourth was a running fourth wave. So an unusual pattern, or a rare pattern under Elliott, he did talk about it. He did provide it for us because there are certain situations where it does come in. It met all of the quote unquote rules to classify something as a running fourth wave. It hit all of them right on the head. So I've labeled it as such. So, but I continue to think if I'm just using straight Elliott, one of the guidelines was fourth wave comes down into the fourth wave of one lesser degree. I'm looking for minute. It's going to come down to the minuet. There it is. Now, I'm going to add my tails. And suddenly I'm like, well, you know what? We have the possibility that, well, I think we can get to 22,675 and either that'll complete it or we're going to get a wave A. Now, where can I start to expect? But let me go over this. So there's about a 35 to 38% probability that we get a 10% event. I think we're in that event. So maybe we get to 22,675 on the weight of this increased and renewed tariff war. It's not even close to being over. Now, what happened if we quickly put in this minute fourth wave? What's got to be inside? Let's go back down to this. We can come down and on Monday put in this low, or depending, because the future could do it for us, and then the NDX just kind of gaps one way or the other. But let's just think that we're looking for minuet wave A of minute wave 4. That's what I think we can finish now. And I think it's going to come in a little bit higher, right, than 22,000. That's down a little bit further. Oh, and by the way, those tails, they were configured for the cash market. That price stays constant. The future price, first of all, premium comes out of it. So I don't really run the number to say, well, this is where in the future we should be looking for this. I do run it for the Qs, and I will go over those in just a moment as well. So here we have the possibility. I'm looking for wave A. I think, right? And this is something else I talked about last week that I was really kind of, and I use the word hope, that this fourth wave, this minute fourth wave, would end up being a zigzag. And what the zigzag signifies is that it's wave A is 5 waves, wave B is 3, and wave C is 5 waves, a zigzag. So it's like a big Z, but a zigzag type of a pattern. And guess what? I think that's what we're getting, obviously. So here we have 1, 2, 3, 4. We're in 5. Once I can get that fifth wave done, then I can put minuet wave A. And then we rally. It's going to seem intense, let me say. It's going to be a decent bounce because this drop has been very dramatic. So I would expect a pretty decent bounce. And we can put our fibs in once we get it. And the fibs would be that you take from that top down to that low, and then you're going and you're 50 to 62% retracement back up for that B wave. Because it is likely coming down in 5. I'm not looking for a flat, right? Remember corrections, they can come in either a zigzag, which is pretty straightforward, 535, or it can come into what we consider the flat family, which is an ABC, but where it could be flat. So whether you got A down, that in itself is an ABC, and then you have B wave up, but it has that ability to almost go back to the starting point of wave A, or even go to an irregular, which we've dealt with pretty consistently recently. But we get these irregular B waves, right? Well, under the flat family, that's where it comes in. And then the C wave would be expected to go back down. If it was irregular, it's going to go down further. But if it's just a plain flat, we'd be looking for wave C to come down pretty much in the area where wave A ended. So that's the flat. Not really moving around. I'm not looking for that now because I pretty much can count 5 down. And therefore, it should be a zigzag. It should be, number one, easier to trade, right? Friday, if you could just focus and stay out of like, oh my God, look what's happening. The market's dropping like a stone, and just get your trader's hat on, it was very tradable because it was nonstop. Yep. When you got in, if something was suddenly somebody moved in or some order came in to buy, it seemed like it was doing it in a vacuum. Like, oh my God, they're switching, they're going to fly higher. And it didn't. So part of trading in something like this, you kind of have to understand the product. So in other words, the NASDAQ, it's already thin because the buyers are fleeing and the previous, the buyers are turned into sellers and the sellers are like, we're not buying it here. So the bids become, they just drop further down. And the algorithms are who's ever doing the selling's got market orders. So if in the midst of that, there's this like a 30-second lull or a minute lull between the larger sell orders hitting the market and you get a buy order, it's kind of like trading in a vacuum because suddenly it just zips up, like zoom. So having to understand where your count is, what's happening in front of you, where resistance can come in, and what your account can handle. Because a lot of times you can enter a position and you're going to take immediate heat because the market turns and goes the other direction real quick. But because we're in this wave pattern and the situation where we're watching the gamma levels get broken, boom, 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 that just accentuates when they get broken to the downside and we're flipping from risk on to risk off trading. Understand it's a sell. Risk off is selling. And now I just explained as to why that comes about, why they're selling. Think about what the dealer who had to provide all these fills on the way up and the risk on, right? Selling the calls to the public or to the other to buy side, and also buying the puts. So what is their hedge? Sell. If they now have to turn around, right, and have to buy the calls and sell the puts, they're going to have to sell. That's why I say things can get accelerated. Everybody's making the move. Everybody's doing. And the end result is that we're dropping, we're dropping, we're dropping. So when you're trading, and we keep all that in mind, you can build a window. How much risk can I take? Do I want to layer into this? That takes skill and not for the weak at heart, I'm going to say. Because if you're working with a smaller account, you can wipe yourself out in a heartbeat. So I get that part. But staying focused, understanding that you're going to be standing in the chaos. And what's really creating the chaos is fear because it's moving so fast. Where do I get? Oh my God, what's going on? How do I do this? That all has to go to the sidelines because the focus has to be very intense. I'm on to the trading. It's not that I want to say it's a learned skill. It's more of an experience skill. If you've traded your product long enough and you kind of have an idea on what its limitations are, you're watching how far it can go either direction in a particular market condition, and now you can add the conditions all together. It had a stimulus when the president mentioned sinister move by China, trade war back on. Boom. That was the enzyme. That was the stimulus to what the sellers needed to do. That they didn't need to hear anything more. They knew. Act first, we'll resolve later. Now, on that same note, I'm looking for the wave A. What could produce a decent wave B? If we're sitting in this negative atmosphere of like, oh my God, he's going to go put 100% tariffs. First of all, that's not supposed to go into effect. Could change, but I heard and read November the 1st. China's reverse what they're talking about against not allowing rare earth minerals to be sold or to trade. They're putting the restrictions on that, and these are Those are big things, big exports from China to the United States for a lot of production. Electric cars, batteries, chips. There's a whole bunch of stuff that needs rare earth minerals to get produced. You cut off that supply. So we're not even going to talk about the political fallout here, folks, because what's behind it is political. I mean, it's real because they're cutting it off, but it's all this trade war, which is nothing more than political. And it's the leader of China against the leader of the United States. I hate to say it, but I'm not going to go into the politics. Let's stick to the market. So when we have all these conditions together, figure out how much heat you can take. Maybe you don't trade the mini in the NASDAQ, which is $5 a tick. And by now, you got to understand the NASDAQ trades in dollars, not ticks. It'll flip through those dollars like mad. And so it's $20 a point. So every $1 move in the index is $20 to your P&L. And I'm talking the market was dropping 5, 10, 15, 20 points. You could get $250 to $500 before you blinked in a trade. So it's golden opportunities. It's amazing to go in and do it. And there's going to be a lot to be done if you don't focus on the cause, the chaos, and everything else. Now, here's the other side. We're done with wave A. We're going to get a B wave. We know that we have an administration and a leader of that administration who tends to change their mind pretty easily, pretty quickly. He talked about November the 1st being the date where these 100% tariffs will be added to the existing tariffs that have been placed against China for all the different products. What if that gets changed? What if that, he said, I'm not going to meet with him. I have no reason to meet with the leader of China in this economic summit that's coming up. Then suddenly, this morning I'm reading, well, maybe. So this is what I'm talking about. Understand that what's going to come out verbally, even though it could change within a minute, it could change within a day or two, still has an effect on the market, and that change has an effect on that market. And the example that I will give you is going to go back over here, and it's right here. See, minute wave one. This was, oh, first of all, putting out the word to whomever, I think it might be a good time to buy. And I'm quoting, I'm not making this up. This was a real quote. But at the same time, the message was, I'm going to pause. I'm going to put a pause on implementing these tariffs. And back in April, we were talking about 145%. We are having a tit for tat type of a war. Well, if you're going to do 145, we're going to do 155. Well, if you're going to do 155, et cetera. And it just kind of climbed from there. We're going to put a pause on that. Remember that day? The NASDAQ went up 2,000 points. Friday, the NASDAQ went down 1,100 points. What happens when we get a reversal? I don't think the B wave. I think if we might get something like that. We might get a little talk, right? We get a B wave and then we get the C wave because they kind of come in and they nab at each other. So going back down, what if? And these are just what ifs. But we come down, we finish wave A, get some respite, get some type of news that maybe relaxes the tension. We get a B wave and then floor it. We don't know. That's off the table. And then we get a C wave. Then what happens if we get say, well, we talked and we're okay. We're not going to do that. And it all happens before November the 1st. Okay? Because the algorithm, which has been telling me what should we expect for the end of the year, we're going to have a decline into mid-October, maybe the end of October. Is that how long all of this may last? Maybe. Okay. What happens if it gets resolved? What am I expecting next? The algorithm is telling me that we should continue to rally higher through November and then finishing and believing that the rally could last until December the 10th. This is what the algorithm is figuring out. Well, guess what happens on December the 10th? It's a FOMC meeting day. We have another one coming, I think, on the 19th and 20th of October. Nope, I'm going to take that back. It's probably going to be the 21st and 22nd of October, if not the 28th and 29th. Right? So we have an October Fed meeting and then nothing in November, and we have a December Fed meeting. These may all come into play exactly on this timing that we have going on. So again, what could put an end to this minute fourth wave, put that finishing endpoint in, if we're looking towards the end of October, right? So we're going to be going through earnings. So it definitely could be earnings or a couple of earnings report, but it also could be the Fed meeting. How do we know? Just giving a lot of things that are coming and what could affect or have an effect on this market and on stocks. And that's what I'm talking about. So we're combining all of that along with the gamma levels, along with volatility, along with indicators, along with Elliott and Fibonacci to put together a picture. And so right now, we got a big change that happened on Friday. Let's map it out. And Friday by itself almost gave us all of Minuet Wave A, of Minute Wave 4, which started, or Minute Wave 4 started the day before. So Minute Wave 4 started on Thursday. So we were just starting it here, and then it got the boost. So we might finish Wave A Monday, Tuesday, maybe. I don't know. I don't think it's going to take too long. We get a B wave, we get a C wave. And that could take us through, I don't know, next week. October 17th, next Friday, is October expiration. It's promising to be pretty wild, right? Because a lot of stuff got rolled out. A lot of stuff is going to have to get changed again next week in preparation for that expiration. And we have earnings starting on Tuesday. So we're moving into what could turn into a nice volatility season. We're already looking for volatility, the VIX, to spike 25 to 30, 25 to 30. That's the estimate right now. Depending on the severity, folks, depending on how these positions in the VIX, if we get a panic in the VIX, it's going to spike higher. Excuse me, if there's going to be covering. This is our reality. I'm not saying that's what exactly is going to happen, but I think we need, as traders, to be prepared more mentally than actually physically, right? Because physically we want to stay calm. Physically we want to stay focused because we want to trade, whether you're trading options, stock, ETFs, or the futures. Again, in the futures, we have choices, folks. And most of the futures markets, we have choices. We can trade a micro contract. Now, here in the NASDAQ, that is 50 cents a tick or $2 a point. Or you can trade the mini, which increases it by 10 to $5 a tick, $20 a point. When things are moving real quick and you really want to get used to trading and you want to be in there, trade a micro. The S&P has micros. The NASDAQ has micros. The Russell, I'm sure it does. I just don't know the symbol. Gold has a micro. So they're available. Or even if you're trading options, you want to keep focused. You want to keep clear-headed. You want to stay away from you want to stand in the chaos, but there's going to be a lot of opportunities. So therefore, really keeping it together is going to be real important. Real important. Okay, so that's the NASDAQ cash. Now, just to kind of go over, because I have them, the right tails. Once minute wave 4 is over, we're going to, well, the market should rally up in a minute fifth wave, which in turn, when it completes the minute fifth, it's going to complete the minor fifth, it's going to complete the intermediate fifth, and it's going to complete the primary third here in the NASDAQ. A little bit different on a degree level in the S&P. Okay, so we're going to be rallying. Same deal on the right tails, 10% and 15%. The percentages are about the same, and the percentiles are pretty much the same. And so if we have a 10% event, right, that's going to shove momentum, that's going to shove volatility, we have an event that's to the positive side, it's to the bullish side. There is on a 10% move, and this one could be earnings, or this one could be resolution to this new problem that we're having with these trade war. You could get a 10% upside move pretty dang quick. We're getting the 10% downside move pretty dang quick. So 10% up would be 27,698. Wow, we're at 24,221 and we might go down to 22 and you're talking 27? Yes. A 15%, which doesn't have as high of a probability, I believe it's probably going to be like 15%, maybe even less, is 28,972. Outside of these percentiles, when we go over and we're looking at the total percentile, the the numbers change pretty dramatically in terms of probability. Your probability drops very to pretty low, which is why I just include these. Doesn't say that they can't happen, but the probability is lower. So, but if they do, you'd be like, whoa. So, not saying they can't happen. It's just the probability goes much lower. All right, let's go over and take a look at the NQ real quick, and then I want to get to the Qs as well. Okay, here, I did put these on because these left tail, right tail, these numbers are the same numbers that are on, I think they are. No, they're a little bit different. A little bit different. They should be the same. Um, yeah, this is 675 and this, I don't know why I did that. This is 416. So, but these are not necessarily here for the NDX. I put them here because it's too difficult because we're working on the December contract, which loses value, it loses premium every day. And twice as much, not twice as much, but double it on what it loses per day because you got Friday, Saturday, and Sunday that we don't trade. So you take volatility out, and so and premium out. So these numbers would change. So I'm using these, and they're based on the NDX, just to let you know. Now I'm going to bring it down out of that. I'm going to go down to my hourly. Here, amazingly, it's a little bit clearer on the count. So there is the fifth, and the third, the minute third. Here's our first marker, 0.236 is 23,572. Here is what happened. This is what I was talking about. Pretty much, if we looked at the NDX, it closed and it went up, right? There is your 12, there's your 1 o'clock. This is the close. And that came after the close where we went pa-boom. And so it came in that extra hour. And so we basically dropped from like three. Let me go down. Let me go down on the 15 minute and I can see it. There it is. Right there. See? So here we have 12:45. That's, 3:45. And here we have 4 o'clock. So one, and then this is 4:15, this is 4:30, and that's when it happened. 15 minutes before the secondary close, we get that news about the 100% tariff. Market went from 24,423 to 24,156. Wow. Big drop. Big drop. Like you just have to look at the NDX. NDX closed down 876. Oh, future closed down 1100. That was this. And then somehow all these stocks recovered and they're back up to probably that level. So again, here we go. Let me pull this back out to that hourly chart. If I'm doing 1, 2, 3, down to that low, 3, and I can get a 4 that's going to bring me back up to here. Okay. Now that's the 4. And then I get a 5 down. I have some additional markers if we just keep going. And that's just on this third. So it's a little bit more difficult. Once I get the 4, then I can go from here down to there. I do wave 1 down to the top of wave 4. And now I got wave 5. I don't think it'll be too different. But here we have. Here's 23,982. You'll be able to fill in that blank. Again, I'm looking for minuet wave A of minute wave 4. And once I can get that, then let me put this back up, go like this. Then I'm looking for a B wave back up. Now, to do your B wave, you take it from that high down to wherever that low comes in. So that'll be wave A, and it's going to be 1, 2, 3, 4, 5. Looking for a zigzag. So that we're going to put that in, and you're going to look for 50 to 62% for a B wave. Those are the most common for a B wave. But with the intensity that's coming behind the reason we're dropping, if we don't get any relaxation there and the pressure stays high, the rhetoric stays high, the back and forth stays high, well, we may not get much of a bounce at all. In fact, we may only get to wherever this thing opens tomorrow. If these stock prices stay the way they are, we're probably going to get a bounce. Because this all got moved up after the secondary close. So maybe we start there and then we just start coming down again in that fifth wave. Okay, so again, that's what I'm looking for. And then we get that B wave, and then we come back down in a C wave, and then that's where I think these can come in. And I'd be looking at actually 22,674 because what do we have here? 382. First of all, there's our previous fourth, right? 23,025. I have 22,674 in the hood, not on the nose, but in the hood. That works. And then I have 382 at 22,445. A total blowout here on this level could bring us down, right? The 15% lower probability, but still there, 21,414. NDX. And there's still, I think, about a $200 or so premium here in this December future versus the cash, maybe a little higher. So you got to add that to this. And that brings us up to 22,000 something or 21,700. Yeah, up there somewhere. And if we're going to get that 15% event, so it drops. Okay, so moving averages on the daily, we're coming down. You can see spiking lower, spiking, and on the daily chart, it came down and rested just above the 50-period moving average, the daily 50-period moving average. I find that pretty interesting. that's where it found its support. How they work. So we're looking for a bounce and follow through. I don't think we're going to make it down to here, but I think this will cross and that'll put a little pressure on it. On our hourly, boy, we're all. I'm waiting. I got the 8 and the 20, both below the 200. I'm looking for the 50 to get below the 200, and then we're in alignment to finish this thing. We're in alignment to go down. We might get a B wave, but we're still, I think, stay in alignment to go down, and we finish this. Then we get that minute wave 5. All right. That's going to be it. Thank you very much for spending the time with me on a Saturday or whenever you're listening, and we'll move on. And so I appreciate your time and I appreciate your listening through to the whole thing. A lot of stuff got covered here today, and a couple of things. The gamma levels are given to the members. So I have YouTube memberships. They are still in existence, and I am considering quite seriously. I have a trade room right now. I'm keeping it limited to number of people because I like to keep an open mic where people can contribute, people can talk, people can ask questions of each other, of me. And so my screens and my trading screens are the ones that are up and being shown. But I do have a trade room. And right now, I'm going to try to limit it between 10 and 15 people. Get above that, then I got to, shut everybody's mic off because it can get a little bit out of hand. So if I can keep it under that, and that's what I like to do, and you have an interest and you want to come and trade during this period, www.logicalsignals.com, hit the trade room. I am keeping up where I'm still going to offer out a 1 month trial. So it's not really a trial, but it's a discount off the regular price. The regular price is $150 per month, but I'm willing to give the first month for $100 to those who want to come in and take a look or give us a try. And at the same time, if you're really thinking, hey, I'd really hang out for 6 months, I can do that, and I'm offering that at a discount as well. Normal price would be $900 for 6 months, and I'm going to offer it out for now for an additional up to 10 people for $750. All right. And then also, if anybody has an interest, I also offer coaching. So if you're like, boy, I need to figure this out, I got to work on my stuff, I am able to offer that. I'm also giving courses in Elliott Wave. So all of that thing to kind of build your own arsenal. Major thing is the trade room right now, and that I have memberships. And I would suggest bronze and silver are very reasonable, and then you get all the morning and all of the goodies. So, and then I'm also considering moving the trade room over to a live stream on YouTube. I'm going to be doing some investigation there. Not sure I'll do it, but we'll see. Have a great weekend. Next update will be Monday morning.